Can everyone hear? I don't know. I don't know how to do this. Can the people that are attending remotely hear? We're having some problems. Nope. Do you have to let them in?
I can hear you.
Yes, I can hear you.
I can hear you.
Yep.
Fantastic. Okay. Well, this is the regular quarterly meeting of the Washoe County School District Audit Committee, taking place at 425 East 9th Street, Washoe County School District headquarters. Calling the meeting to order. And Jean, would you please take roll call?
Ben Bartow. Guess he's not here. Wesley Chugilern. It's not here. Todd Shipley.
Here.
Ron Ellis.
Here.
Jennifer Thomas.
Here.
Vita Ozude. He's not here. Deborah Yates.
Present.
So we have 4, so we have a quorum.
Okay.
I'm not sure where Ben is, but
Okay. Okay. All right.
I'm going to backtrack on that roll call. Ben Bartow.
Present.
Thank you.
Couldn't find my Teams link.
Alrighty then. It looks like the first item on the agenda is the approval of the minutes of the audit committee held August 11th, 2022. Okay. Do I have a motion for approval? Okay.
Deborah Yates make a motion to move that the audit committee approve the minutes of the August 11th audit committee meeting.
Okay. I, Ron Ellis, second the motion. All those in favor of approval, say aye. Or
Aye.
Aye.
aye. Okay, you can abstain.
I'll abstain because I wasn't present at the meeting.
Okay.
Isn't there 5 of us?
Okay. All right. Motion carries. Jean, did we get? Okay. Motion carries. All right. Next item, presentation and possible action to recommend the Washoe County School District Annual Comprehensive Financial Report for the fiscal year ended June 30, 2022 be forwarded to the Board of Trustees for acceptance. Okay, and I believe we have a presentation here.
Thank you very much. Mark Mathers, Chief Financial Officer. Next to me is Mindy Capron, our Assistant Controller. And joining us due to the weather via Teams is our great partners at Crow LLP, Jeff Jensen and Charles Raby, who's not actually in a tropical setting, I don't think, but he's looking good there. So I want to make a few remarks prior to turning it over to Crow for their presentation. First, I wanted to express my appreciation to you to present along with Crow, our annual comprehensive financial report, or what we call ACFR, for the period ended June 30th of 2022. And so we're excited to finally be able to present this to you. We want to express our appreciation for your patience during this process. As you know, we requested and received an extension to complete the ACFR due to the departure of our controller and other staff this fall. You know, for those who work with the district closely, you probably realize and know that the district's seen a fair amount of turnover in its management and senior professional ranks over the last several years with the Great Resignation and the pandemic and so forth. And so this fall was kind of the business office's turn at that, and it's now that wave has now hit other departments. So we did have turnover and we needed to get that extension, but fortunately Mindy picked up the ball back in January, and with a team effort, we were able to finalize the act for this last month, recently. So again, I wanted to say thank you first for your patience, and thank you to both Kirk and this committee for extending the date for you to review our ACFR. As you know, the ACFR is required by law, as well as the audit of our financial statements by an external, an independent CPA firm, no less than annually. So, we're here today. This was a massive and intense activity. As you saw in the ACFR, we maintained 54 funds plus several fiduciary funds, and total expenditures of our governmental funds were a little over $950 million. So there's a lot of great stuff in this report that we're happy to go over, but we kind of feel like, in the interest of time, rather than go over it with you, we can go over any questions you have after Crow's presentation if you want to kind of zero in any areas. So with that, I'd like to turn it over to Jeff and Charles to go over their presentation, and they do have a PowerPoint deck to review.
You're up, gentlemen.
Great, thank you. Appreciate you allowing us to appear via Teams here today. As you are probably seeing some of the weather come your way, it's been quite a stormy last 24 hours here in the other side of the hill here in California. But again, appreciate your convenience of allowing us to be with you this way today. It's our privilege to be here to help present the report for the year ended June 30th, 2022. I do have a PowerPoint presentation here, so I'll share my screen, and hopefully everything will work out fine from that perspective. All right. So starting at the overall concept of the audit itself, our job as your auditors is to express an opinion on the financial statements that are prepared by management. As part of your audit, we also look at your federal compliance and provide an opinion related to your compliance with federal requirements as well. The audit starts with an evaluation of risk and looking at the risk of material misstatement and understanding the internal controls and the tone at the top of the district, and that then works into our planning procedures that we go through, which includes a lot of interviews with different discussions with folks throughout the district, and then looking at internal controls over financial reporting and testing some of those controls in addition to the work that we do on compliance. Ultimately, that results into a risk-based audit approach that the year-end time frame here, we test the actual balances of the district as part of your financial statements, and then work with the district in preparing the ACFR there, the 330-page report there to ultimately summarize the district's financial position at June 30th, 2022. So this process started back in the May-June timeframe and was a bit delayed here this year at year end, but ultimately we got it done here in November and December to allow us to be here today to present it to the committee. Management also has responsibilities as part of this audit, and their job is to prepare those financial statements. And that's, putting that on one line really is kind of an understatement of how much work goes into preparing that thick document there. There are a lot of financial statements that are a part of that presentation. They're also responsible for complying with federal and state requirements, and then establishing proper internal control over financial reporting and the financial statements. As we look at things that have changed over the last year from an accounting reporting perspective, there was one new GASB this year that ultimately didn't have a significant impact on the district's financial position, and that was related to GASB 87 on leases. So, as part of evaluating that, management had to prepare for us an inventory, if you will, of their leases and what the potential exposure and future payments are related to those leases, and then present that and work through us as to whether that would ultimately be a material impact to your financial position. And at the end of the day, we determined that there was no material impact to your financial position. So in effect, the statement is implemented, but there's really no changes to your financial statements because of this new standard. Next is a discussion on audit adjustments, and I'm happy to report to you that there were no audit adjustments. So the numbers provided to us by management to audit are the same numbers in this report with our opinion without modification. So ultimately, it's good news to report to the committee. We also have no uncorrected misstatements. So these are the smaller differences. As we go through the audit, we track them to ensure that they don't aggregate into a material number. And so we did not have any uncorrected misstatements either to bring to your attention. Professional standards have other communications that we're required to put in writing and discuss with the committee. And so on this slide, we take care of several of those by telling you that we didn't have any difficulties encountered in working with management. We didn't have any disagreements with management, and we're not aware of any other consultations with other accountants. So this would be if we were discussing, let's say, GASB 87, and we felt it should be implemented a certain way, and management felt differently and pitted us against a competitor to opinion shop. That would be consulting other accountants, and so we're not aware of any of that. We're also not aware of any significant or adverse events that we should have communicated to the audit committee. Certainly, if we had come across any of those, we would have done that long before today. So ultimately, those are all good things to report to the committee. With that, I'm going to turn over to Charles to take over the next couple slides.
Thanks, Jeff. So sort of the culmination of the results of our audit, as Jeff mentioned, we had the financial statements audit, and then we also, because the district expends more than $750,000 in any fiscal year of federal grants and entitlements, you're subject to what's called a uniform guidance audit, also known as a federal compliance and controls audit. And so you can see from this slide that our audit opinions are unmodified, or the clean opinion. So that's the highest level of assurance that you're looking to achieve out of an external audit. So again, sort of summarizing that good result for the audit for 2022. You can go to the next slide. This slide really is intended to just give a summary of some of the key financial highlights of the financial statements for the year ended June 30, 2022. So kind of broke it into two buckets. There's a lot more to it, but at the kind of overall picture, the government-wide picture, you've got total assets at June 30 of $1.9 billion. Total net position, or the equity position, is a negative $193.4 million. And I should note here the sub-bullets of the net pension liability and the net OPEB liability. Those are two obligations. We'll discuss those in a little bit more detail on a further slide. But the idea here is that you are recognizing this actuarially determined liability, which affects because there's a large actuarial liability, those amounts, when you look at them even individually, are so large as it relates to your equity. So that negative $193 million is including or factoring in the net pension liability and net OPEB liability. So if you were to back those two kind of actuarially determined numbers out of the $193 million, you actually are in a much more positive equity position at the end of June. It's really just for perspective. And the change from the prior year, so your equity position last year to this year went up by $126 million approximately, so a positive change from last year to this year. And that's again at the government-wide level, not just at the fund level. So the next section here is the general fund. So this is really just looking at only your general fund activity. And so the fund balance there, you got about $61.6 million at the end of June of fund balance or equity. And that was an increase from the prior year of $3.3 million total equity in the general fund. The last section on the slide is just some color as to some of the debt changes over this current fiscal year that's being presented in the ACFR. So You had, 49.2 million of general obligation bonds, 64.9 of general obligation refunding bonds. So that's a refinancing of prior debt. And that's done to achieve savings and interest expense over the life of that debt. And then one direct placement borrowing issuance in the current fiscal year of 3.4 million. I believe that was used to purchase district vehicles. The next slide here really is summarizing if we had any findings. So if we had any findings that were reportable in the audit report under the auditing standards, we would have them included in the slide, but I'm again glad to say that there are no findings to report for this year. Kind of moving on, I know that the concept of the pension liability and the OPEB liability can be sort of this mystery in a way as far as what drives that total obligation and where that comes from. So this is intended to give the committee and then as well the board next week some color or background as to what drives those liabilities. So the pension liability, which is accounted for under GASB 68, that's your or the district's proportionate share of the Nevada PERS pension plan liability, net of any investments that are held for that under that plan. So they tell you, how much you're to contribute annually, and then you are given the proportionate share, the total, your liability as it relates to the total. Again, that is done by an actuary, and this year's liability, you may have noticed, decreased significantly over the prior year. This last bullet point under the pension liability talks a little bit about that, but what really drives that change in this fiscal year is the investment value of the Nevada PERS. So at the measurement date for that plan, investments were really hot. And so because the investment value was very high, the net liability was decreased. And so that doesn't reflect activity after that period. It's that activity or that performance at the measurement date, which was June 30th, 2021. The OPEB liability, sort of similar in concept, where you've got benefits that you've obligated the district to provide to employees who retire. This is only the district's plan. It's not a state plan. So your OPEB plan, but it is also actuarially determined. So you're looking at a lot of assumptions as far as whether employees will stick around long enough to be eligible for the plan benefits, how long they will utilize those plan benefits as they retire and go through that period. This plan also had a decrease in the OPEB liability in the current year. The liability itself decreased this year because the discount rate was adjusted, which does affect this year by reducing the net liability to a lower number. So I'm happy to expand on any of that if you'd like, but that's really the summary of that. Sorry, thanks.
That's all right. I'll just bring it home here with the wrapping up our last slide here, which is just to say that the district's financial statements are presented fairly in all material respects, and we had no audit adjustments. There also were no findings in the report. And, while I think they all acknowledge that this report was a bit delayed, there was a lot of hard work that went into pulling this report together and ultimately presenting, I think, an accurate set of financial statements that present well the district's position as of June 30th, 2022, and be able to submit it for the certificate of achievement there, as you've always done in prior years. So I want to thank Mark and Mindy for a lot of their hard work there, as well as other folks throughout the district that help us as part of auditing the compliance elements. There's a lot that goes into the audit, and I'm sure everyone's happy to be done for a few months with the audit before we start next year. So with that, I'd be happy to answer any questions.
I do have a question, just a couple of points of clarification. The first one, I think you mentioned June 2021 and how the liability went down. What are we not discussing the results as of June 2022? And are you saying the liability went down, and to what do we attribute that? Is that market performance or investment performance and the pension liability?
So GASB 68, as it was established by somebody that was smarter than me, was to allow for essentially the pension liability to be reported a year in arrears. Because if that didn't happen, then we'd all be waiting for all these pension systems to complete their audit reports in order for us to be able to complete your audit report. And, while Nevada PERS, I'm sure, gets their reports done timely, there are many small pension systems that are out there that aren't quite as lucky. So everything is reported a year in arrears, which has always been the case since you implemented GASB 68. So yes, the liability is as of June 30th, 2021 for your June 30th, 2022 financial statements. Because of the positive effects of the market during fiscal year 21 for the pension system, that's largely why your liability saw a decrease. Now, again, another element of GASB 68 is the deferred inflows and outflows, so it actually will smooth that change in liability over a period of time. And so, as an example, your deferred inflows related to pensions actually went up by $350 million over the same period, and that's essentially the actuary there smoothing out the results of the change in the investment market. Otherwise, you would have wild swings in your financial statements related to the performance of the pension system.
Okay, thank you. And then just one other point of clarification, really just for the record. When we talk about OPEB or other post-employee employment benefits, we're talking about things such as retiree health care and similar benefits.
That's correct. That's correct. I believe you actually have a life insurance plan as well. It's basically anything other than pensions per the standard, and each district may offer different benefits to their retirees.
Just wanted to get that on record in case some interested member of the public watches this recording or is watching. They know what the heck that means. I don't have any questions. Anybody else have any questions?
I guess what's the threshold for like reporting a deficiency to the board or putting it on this report?
Well, so that's a great question. So there's three levels of deficiencies, right? So there's material weaknesses, there's significant deficiencies, and there's deficiencies. We're required by standards to report and include in this audit report any significant deficiencies or material weaknesses related to internal control. And, those are essentially findings or issues that are out there that are severe enough that they could cause potentially misstatements in your financial statements. Deficiencies usually are not reported in this report, and different firms have different ways of kind of approaching it. You could do it as a management letter separately for just deficiencies. Deficiencies could also be best practice improvements. So I guess to directly answer your question, in some ways it ties back to our materiality related to your financial statement. So, that's part of it. I think part of it is also, segregation of duties is usually another type of comment that usually rises to a level of significant deficiency kind of right out of the gate. In the case here for Washoe, we don't have a management letter either that we've gone over with management, so we really don't have any findings to bring to the committee's attention.
Or management, is it the point?
Right, yes.
Yeah. Okay.
And one more follow-up question to that conversation. So in your report, when you discuss there's no reportable audit findings, we are to interpret that as within the scope of this audit and that statement that applies to the federal compliance audit?
So in the back of the, I'm not sure I completely understand your question, but I'm going to take a shot at it and feel free to follow up if I got it wrong here. I'm going to share a page in the ACFR for you. So in the back of the in the back of the report here on page 328 of the PDF, but it's page 259, is essentially the summary of everything we just discussed, which is that there was an unmodified opinion related to the financial statements and then related to federal awards as well. And then we have some nice blank pages right behind it here, which show that there's no findings related to federal awards and related to the financial statements. So I don't believe it's just interpreted that there's, or implied that there's no findings. It directly says it in your report.
Thank you.
And then just overall, from your perspective, like given the turnover in the audit team, and then I think back to the IT director when he comes in and says, we need more resources from an IT perspective. How does Washoe stack up with other school districts in terms of keeping these controls going throughout turnover and efficiently using IT?
It's difficult, and I would say Washoe is not unique from some of my other clients. As an example, one of my largest school district clients, just slightly larger than Washoe, just lost their CFO and their director within a month to another governmental agency. So turnover is happening all over the place. I mean, that's just part of, I think, what we see everywhere. I think when I look at Washoe specifically, I think, obviously there's a need for more folks to be a part of your fiscal services team. I see the load that Mindy and Mark are shouldering, and it seems like a lot. But that said, when we look at how the books were closed, I didn't have any audit adjustments, and things went through an orderly process for that. And I guess I segregate that a bit from the annual process of preparing the audited financial statements, which is kind of not the normal day-to-day business, right, of running the district. And so, I think that's kind of the extra load that they really had to shoulder, especially this year, to try to bring this to a close, and probably took a little bit longer because there were less folks involved in it than in prior years. From an internal control perspective, I think your controls are sound. Do you have enough people that you're not stressing out your folks? I mean, there's probably not a lot of places that say we've got plenty of people.
Yeah. And do the systems generally support the finance and accountings team at Washoe, or is there need to be an investment in IT?
That might be a better question for your CFO than from me. I would say your IT system is adequate from an audit perspective for us, but I don't know that it's doing everything that they want it to do from an accounting perspective.
I was thinking of the segregation of duties comment you made specific to the SD and MW. So it does allow for at least adequate segregation. You can audit that.
Yeah.
Okay. Anything else? I'm ready to call for a motion to, sure.
So before we take a motion, I just want to take an opportunity to thank Mark and his staff. I heard Crow say that, yes, the document was prepared, it was prepared accurately, and in regard to staff shortages, they were able to pull it off. But I know that comes at a cost and sacrifice of personal time. And I'm sure that they went above and beyond to prepare this document. So for that, I want to thank you guys. You're welcome.
I'm going to echo that comment because I've been in those situations. I'm going home tonight to log back on and do my day job and try and work on some internal controls for my employer. So we appreciate it. And I, for one, can tell you how much I appreciate it. I've been in that position of being in the office 8, 9, 10 o'clock at night, crunching numbers and trying to get accounts balanced and get the control procedures documented. So it is very much appreciated. With that being said, are we ready to make a motion to move on? Okay.
You make a motion? Okay.
Yep.
I, Deborah Yates, move that the Audit Committee forward the Washoe County School District Annual Financial Report for the fiscal year ending June 30, 2022 to the Board of Trustees for acceptance.
Okay. Would somebody else like to make a
I,
second? Okay.
Jennifer Thomas, second that motion.
Okay. All those in favor, say aye. Aye.
Aye.
Motion carries. Okay, next up on the agenda, we have items 2.03, 2.04, 2.05, 2.06, and 2.07. So instead of taking each one individually, I'm just going to turn the floor over to Mr. Starkey so he can, no, we'll do that. I'm just going to turn it over and let him address each item. Kirk, it's all yours.
Thank you very much. Yeah, this is at the point of the meeting where I apologize beforehand. I have to run through you have to bear with me here. But for most of these, if you got any questions, do not hesitate to ask. It's not a problem. For this item, 203, this is the update on the capital projects professional services audit. As you may recall from the last meeting, I know it was a little while ago, but at that meeting we talked about that our office was going to be seeking a third-party firm to perform an audit of our capital improvement program. And with that one, we'll be focusing on professional service providers, basically architects, engineers, and design firms. This project, it's an agreed-upon procedures type audit with the objective of determining department compliance with Nevada law and Washoe County School District policies when we seek to engage these professional service providers on our capital projects. You might recall we did an audit probably about a year ago, but it was focusing on the construction side, those type of costs. This will be the other side to basically kind of close the loop on the project. The Capital Funding Protection Committee and the Board of Trustees approved the funds for the project. We sent out seeking cost proposals from 4 different firms, and it was actually a privilege. We received 4 proposals back from those firms. And we have selected a firm for the project and are just getting started with the contracting process, and we will hope to begin actually getting to the audit work here shortly. But right now I don't want to name the firm selected for the project in this forum because we're still in discussions and need to finish contacting. There's 3 other firms, and I want to speak with them also. But at our next scheduled meeting, I'll give you a more in-depth update on where we are and things of the like. But if you have any questions on this one, fire away. None? Okay.
Please proceed to the next agenda item, sir.
Alrighty. This is item 204. This is basically what we typically do, the status update on our projects of our office, what we've been doing. Basically, since our last meeting, the biggest thing we've been working on is we're at the charter school monitoring process of our year. This one, there's 7 charter schools that are sponsored by the district, and this it takes up a significant portion of our time during the year. It's beneficial, it's good, but it takes a few months. We're hoping to get, we will be done at the end of this month with issuing the 7 reports related to those projects. The other parts, as previously discussed with the staffing shortages in several departments, we decided to put on hold the majority of the performance audits and focus on the student activity fund audits, basically this fiscal year. And before starting this fiscal year, we had received numerous requests from the schools themselves, basically the principals and management for student activity fund audits. So it was a good time to dig into them actually. As part of your packet tonight, there's an audit report related to the Florence Drake School. That's there. We have 2 more that should be released to you very shortly, Roy Gom and Elizabeth Lynn's schools. And then we have a couple more that are in various stages of completion. We're also going to, the committee it was actually very timely. The committee at the last meeting also had a question about performing follow-ups with the student activity funds. We're going to swing back around to McQueen High School and see where they stand as far as implementing the deficiencies in that audit. It was about 2 years ago, I believe, maybe a little less from that audit, see what has happened there, see if those issues have been corrected. It's a good time because there's been enough time that's gone by, and there has been a little changeover at the principal position. So the timing of that will be good. We plan to start that one around April, I believe. We'll get out there, but that will be more focused, just following up on the items we had previously noted. And then also, audit follow-ups, we'll be getting to the audit follow-ups before the end of the fiscal year, which is IT, has been mentioned. So the items that were not noted as fully implemented from the last audit review, we'll still be following up on those to see where we are. And then we should have the sick leave bank, ready to do the sick leave bank. That one, typically we try to do those within a year, but the contingency on this one is some of the recommendations required involvement of the bargaining units, and so there needed to be time for the department to work with the bargaining units and see where that stands, and those kind of conversations happen every other year, I believe it is. So we'll see where we are with that one. But that's kind of our project status, what we're working on, where we are, and where we hope to get. And if you have any questions,
I do, but then you probably expected that.
go for
Is
it.
it fair to say that due to the staffing issues in other departments, it's kind of holding internal audit back from completing projects?
I would have to say it doesn't hold us back in completing them. No, it's just we have to reorganize a little bit because, like the transportation audit is a good example. With that one, the department was so short-staffed, and they were just trying to meet their critical needs to get those services completed, and we didn't. To be honest, I didn't think it was fair to, burden them with trying to do audits and producing documents and meeting with us when they were scrambling to get bus drivers. So that was kind of like, we put that one on hold. Hopefully.
So it's more being considerate of the departmental situation and coming in at the right time.
Yes, sir. Yeah.
Not waiting for everybody to resign and
Right.
then showing up and saying, "Hi, we're here to audit."
Correct.
All right. Any more questions on Kirk's report before we go to 2.05? All right, please proceed, sir.
All right, item 205. This item is another one for information and discussion. So again, you feel free to ask any questions. It pertains to the annual report of the audit committee. This is an annual item we didn't tackle last year for various reasons because the pandemic was kind of flowing into that time frame. But this year we're going to get to it. It's basically a report that we produce to let the Board of Trustees know what the work of the committee has been. And what it is, it describes the composition of the committee, the activities of the committee, the committee's responsibilities, and how the responsibilities are discharged. We've got a template we kind of put together to help facilitate this process, and we'll put the necessary language and information in there. What we would like to do is get that put together, submit it first to the audit committee chair for review, additions, edits, things of that nature, and okay or approval. And then afterwards, at our next meeting in May, we would like to bring a copy of the draft report to the meeting for all committee members to take a look at, review, and if you have any changes, the same thing, additions, subtractions, and we'll make those changes. And then the goal would be to submit it to the board before the end of the fiscal year to give them an update of what we've been up to, basically. So that's kind of the gist of this item 2.05. If you have any questions on that one, please go ahead.
Questions? Anyone?
All right. Okay.
Please proceed with 2.06.
All righty. 2.06, this one, though, is, because of the nature of it, this is the one where it's kind of information only. This is, I want to give you an update on our Report Waste, Fraud, and Abuse Hotline program that we operate. And as you know, we administer this program for the district, and the item in your packet, let me grab it, my apologies. The spreadsheet, there it goes. The spreadsheet you have in your packet and on the screen shows, basically it compiles all the caseload since our last meeting. The top of the spreadsheet shows the cases that are open from the last meeting. The below section are all the new cases we've had since August of our last meeting. It's basically, since that last meeting, we've had 18 new cases. This averages to over 3 cases per month. It's significant volume, and it's and they're in some cases they're, how do I say, there's more depth and detail to resolving these cases. So as you know, on there we've got several open ones. As a tally for the cases, the new cases, 9 of them we looked at, reviewed, and ultimately transferred them to the appropriate departments for resolution. 1 we investigated and found that it had merit in part. There were several parts to it. A couple parts did not have merit, but one section of it did have merit. In those cases, we produce a report and we issue it to the Board of Trustees, and then that one's closed. We closed 3 of them due to insufficient information. There's just not enough, in some cases, information to even investigate it. And we try to follow up with the complainant if we have a way to contact them. In some cases, we don't, so there's no way to further delve into the case. So they would get closed due to the insufficient information. And we also had one that was outside the program scope. So that was, it was one it wasn't related to us, so it was closed. We still have 5 that are open and that we are currently investigating, and so those 5, in addition to the above 2, gives us kind of at this point 7 open cases that we're working to administer. We'll keep you updated on these. Obviously, at the next meeting, we'll give you an update on the status of the ones that are open. For right now, that's kind of where we are with the program. But just as it is significant volume for the number of cases right now. If there are matters, let's say, that affecting the district in a significant manner, I mentioned before that we do take these into account when we do our risk assessment for the district, so they don't just, for lack of a better way, just go away. That's not how they are dealt with when they're accordingly investigated, dealt with, and they still, we'd like to get them to the root of resolving it. And that's what I have on this one. But if you have any questions, I can take questions as long as they're not specific to cases, if that makes sense.
Is the hotline run through, is it run internally through a dedicated phone line that
Correct.
goes there?
We have a
Okay.
phone line. We get them from all different manners, honestly. It's phone calls, voicemails. We get hand deliveries of documents, emails. Wide variety. Walk-ins. and
All of those reports go directly to you?
Right to us,
Okay.
right. So we have no third party. That is another option. Some places do third parties to administer it. They kind of triage them. I would rather not do that and make sure we see everything and make the determination at our level.
I don't envy you.
Thanks.
I've done these hotlines. They're
It's
quite adventurous sometimes.
It does provide information on operations and activities of the district to our department that I believe we help management with, that maybe we wouldn't see otherwise, because it's not just employees, it's also community members that report. So we like the program.
Okay.
Thank you.
Anyone else have questions on that item? Okay, last item, sir, 2.07, audit committee calendar for information.
Yeah, this one is our typical, it's kind of like the cadence of what to expect at the upcoming couple meetings for planning. Right now, the next meeting we have a date for that one, May 11, 2023 is the scheduled meeting. The other 2 that would be following it we don't have the exact dates. We'll put those in with the new fiscal year. Those are typically August and November. And the kind of type of typical information or items are listed there. If you have scheduling, this is also here for your scheduling, so if it impacts your scheduling, if you could give us a heads up, I'd appreciate it for quorum purposes, and that'll do it.
We're good. Okay.
Thank you, everybody.
Closing items. Jean, did we have any public comment? No. Did you have a
Kurt,
question?
I'm sorry, maybe I spaced. August, there's no date yet?
August, there's no date, and November, in the following one, we don't have a date
Okay.
yet. I believe towards the end in June, we work with, there's a department here to get the dates organized. There's a lot of committees, as you probably know, within the district, so we're trying to coordinate to make sure we have use of the room and the facilities, basically. But it'll typically be a Thursday, 4 o'clock. That's the certainty.
Okay. Jean, did we have anything on the public comment?
There's no in-person public comment,
Okay.
but the
There was the
committee
one entered
received
into the
an email
record.
from Joe Morabito, and I sent that to all of you.
Okay, and that's entered into the record. I looked at it. It didn't look like anything that warranted action or comment. Okay, 3.02. Announcement of the next meeting, May 11, 2023 at 4 p.m. I think Kirk just covered that, but that's an agenda item. And last but not least, adjournment, unless anybody has an objection. I move that we adjourn the meeting.
Yes, sir. I want to thank everyone I know the weather and everything. Thanks for taking time and being here with us. Much appreciated. Thank you all very much. Appreciate it.
Okay, meeting adjourned.
Thanks, guys.
Take care.
Thank you.
Thank you.
There you go, sir.
Nice work, man.
It's almost like,
Thank you.
it's almost like I'm getting used to this.
Yeah.
On the OPEB,
Thanks, Matt.
because it's a year lag, that the decline that they saw is going to go back up.
Yes.
Even though it says it's smoothing, which I didn't quite follow, is it a 3-year smoothing?
I think it's a 2-year. It could swing totally in the other. It's just like a pendulum.
That's what I was thinking, I'm like,
See, actually,
we got a benefit this year, and then next year it's gonna
yes, because they're
potentially
reporting,
be ugly again.
they're reporting on 21.